Good morning, traders and investors. Bennett, TyndallTradingAnalysis.com. Thank you guys so much for tuning in this morning. Happy Wednesday, September 1st, heading into a new month. I do apologize for not being with you last week. A lot's happened in the past 2 weeks since we've met. Gosh, I think it was August 18th was our last live stream together. So I hope you guys are all doing well. The markets continue to make upside progress in line with our overall Elliott wave count and view of the indexes. Seen some interesting developments in Russell 2000 small caps. The 4373 initial warning sign that I gave you guys in the S&P 500 did actually invalidate, or we broke just south of that during the cash session Thursday following our live stream. And you know, initially that was a level that if we broke south of and closed under, that level could indicate to us that potentially a larger correction was in store. Had one of the viewers actually reach out to me on Twitter and just say, hey, look, with that break, are you still bullish? Are you concerned? And my response was, you know, at this point, due to the multiple valid interpretations of the S&P 500 from the 2020 COVID lows, I am still bullish because the NASDAQ 100, Russell 2000, New York Stock Exchange, Dow Jones Industrial, semiconductor ETFs, everything was in favor of consolidation, sideways consolidation, ultimately resolving higher. So the S&P breaking that level really wasn't of concern. We'll take a look at the charts in just a couple of minutes and talk about what actually happened from an Elliott wave point of view. But before we do so, let's go ahead and bring in the trading analysis team. Good morning, Terry. Good morning, Alex.
Good morning, guys.
What's happening? How are you guys today?
Hey, good morning.
Yeah, everybody's doing well here. Yeah.
Good.
Yeah, we didn't have the live stream last week because Bennett was feeling a bit ill last Wednesday morning, but he bounced back, and we're glad to have him back on board. So.
Yeah, I was. You know, it was actually the Sunday before I started to have some symptoms, and it was really rather interesting. I'd wake up with a symptom, and then by the afternoon it was gone, and then the next morning it would be a new symptom, and that continued for about 5 days, but feeling better now. I did get a COVID test. One of them was positive, the other one was negative, so I don't know what to believe these days. So, but just glad I'm feeling better. That's the key, right?
Absolutely.
Yeah. So we do apologize for the last minute there.
This is a green screen vMix issue. We can't get for some strange reason. We're going to have to do some experimentation, I think, figure this thing out.
Yeah, that's my fault. I was running a bit behind this morning. I tell you what, you take a week off of running this software and running a show, and everything goes out the window. So you start bringing people in without their green screens keyed out. So we appreciate it, and I apologize about that, Terry.
No problem, guys.
So what's up, Alex? How are things in your neck of the woods? I see Bitcoin just still struggling to get over that 50,000 level. Anything else interesting in the crypto space?
Yeah, not much in the crypto space. We have seen some of the alts moving in the initial impulsive move after the low. So on that front, it was interesting. So we are looking for still undecisive markets regarding the overall higher time frames. But I think initially Bitcoin dominance chart shows a potential low here in Bitcoin, so we might see some of the volatility coming again soon into cryptos. So as a Bitcoin is concerned, I'm still waiting break of the key levels, and on the macro front, we had Jackson Hole and some of the new perspective from the Fed. So we will talk about that in the macro section.
Very good.
So not much. I mean, Bitcoin is consolidating. Most of this action was on the altcoins for the last week or two.
Yeah, we did have the virtual Jerome Powell press conference at the Jackson Hole Symposium last week. Actually had a fairly substantial intraday rally there. ADP out this morning, non-farm payroll on Friday. We'll continue to keep watch on that.
Yeah.
All right.
That will be. Yeah.
All right,
we'll talk about that.
Yeah, I was going to say I could go on, but you know, I'll dissect a chart. But we need you. We need Alex for the macro stuff, so we appreciate it. I'm going to take you guys through the Motive Wave platform. We're going to take a look at the indexes, specifically the S&P 500. We're going to touch on the NASDAQ as well as the Russell 2000 because I think the Russell 2000 and specifically the NASDAQ have really been our best guide in this market. So, gentlemen, I'll be back with you on the other side, and we'll see you in a couple minutes. All right, here we go. Once again, thank you guys for taking time out of your mornings to join us. So let's jump into it, hard right edge of the MotiveWave platform. We're starting it off with price action in the S&P 500. And what we're taking a look at is a 1 hour chart. And we're taking a look at a 1 hour chart, essentially going back, if you look at the top left-hand corner of this chart, we're looking at about July 13th and the pullback into July 19th. Interestingly enough, and I pointed this out to the viewer on Twitter who had asked about the pullback that we were seeing, and we noticed the past 4 months we've seen 4 consecutive sell-offs into monthly options expiration, concluding either the day before, maybe the day after, or sometimes the day of monthly options expiration. But this has occurred in May as well as June, July, and now August. So those were 4 pullbacks right into monthly options expiration. The Elliott wave count in the S&P 500 has been a bit subjective from the COVID lows. We've seen a lot of overlapping corrections. That makes way for several valid possible counts or interpretations of price action. And we've continued to view the 4 pullbacks that you see here as entry opportunities with our clients. And what we've essentially seen happen since now the August monthly expiration low is this. So zooming into price action here, we're going to go ahead and focus in on the July 19th through the August 16th high, and then take a look at this pullback into August 19th. What we had tracked initially was the idea that following the August 3rd low through the August 16th high, that the 5-wave motive impulsive structure that you see here was actually potentially in the S&P 500 a wave 1 advance. If that was going to remain a wave 1 rally, we needed to see the corrective pullback find support before the origin of the impulse. Said otherwise, we don't want to see this correction take us south of 43.73. So what we had on Wednesday, and I'm going to take you off of the 1 hour chart. Let me get rid of these circles. We'll drop another one on so you can keep track of price action. So from the 1 hour to the 15 minute, you'll see here that from the August 16th high, and let me decompose this just one moment, we noticed from the August 16th high into the 17th, we met with you on the 18th. We said, okay, so far from the 16th through the 17th, we printed a 3-wave measured move decline. At that point, that technically could have been all of the correction, and we were setting up for some sort of a 1-2 with continuation on the upside. What ultimately ended up happening is the S&P 500 retraced about 61% of this 3-wave decline. Once we retraced 61% of the 3-wave decline, we then move lower in another 3-wave, about a measured move. So what ended up happening is while the NASDAQ was completing the correction that we discussed here from August 5th in through the 18th, as the NASDAQ was completing this correction, we were hopeful that the S&P 500 could then maintain the August 3rd low, establish this as some sort of a 1-2, and then look for continuation on the upside. We broke through 43.73. What that ultimately did to the S&P 500 is turn price action from July 26th through the August 19th low into an overall correction. You have 3 waves off the top, 3 waves back, and this C-wave position would explain the 5-wave impulsive trend that unfolded in the S&P between August 16th or August 3rd and the 16th. That completes an X wave or maybe a B wave of some sort of a flat. We didn't get 5 waves lower though, so difficult to view that as a flat. And then we move lower in your Y wave to the tune of about 100% retracement of that X wave. So what ultimately ended up happening is the S&P 500 did violate that low, but still remained in a corrective trend. So this was by no means a directional move off of the top. This was not motive or trend establishing. And so that's why when the viewer reached out to me on Twitter and said, hey, look, are we concerned with the break under 43.73? My answer was no. And the reason my answer was no, because we continue to see positive developments in the NASDAQ. The NASDAQ 100 was really the key indicator here, I think, in terms of overall collective market sentiment. And you'll notice here the pattern that we saw from the 26th of July in through the August 19th low was very clearly counter trend and corrective. So you have a move down, the 3-wave counter trend retracement into August 5th, and then an expanding ending diagonal. We had a zone of support at 14.8. Notice 4v2 equality and C versus A equality at 14.8 up to 14.828. The actual low for the NASDAQ, if I bring a price label in here, was 14,773. So we did break just a little bit below that level, but in a 14,000 point index, not too concerning. So now we've rallied clear up into the 15,500 fib cluster, which has kind of been one of my longer term upside targets in the NASDAQ. And I see one of two possibilities. Possibility number one is we do get one additional attack into that cluster and then enter some sort of a retracement. Alternatively, the high may have actually occurred on the 30th and we're now actually working that wave 2 corrective pullback. So we continue to remain bullish. It's a very, very tricky market environment. We're tracking this actively with our clients. If you are interested in tracking this in real time with us, you can check us out at tradinganalysis.com. So that's the S&P as well as the Russell 2000. I do think we're gearing up to correct now this trend from August 18th in through August 30th. The corrective pullback that occurs here will be very telling in terms of what's happening in that higher degree count. Really quickly, let's take a look at the Russell 2000 and we'll jump back over to the team. Looking at the Russell 2000 small cap chart, we made note of the fact that we've been in mostly sideways consolidation since February of this year. This is one of the charts that we've used to kind of illustrate our sentiment in terms of not being bearish or expecting a prolonged counter-trend corrective pullback. Here we actually have a potential trend establishing move in development. We're going to continue to watch that. And then the chart of the SMH, semiconductors being an industry group within semiconductors or within technology, still looking very bullish and coming out of our wave 2 flat position. So up into trend line resistance, expecting a bit of a pullback there, and we'll continue to look higher. So remaining bullish until we have a very good reason to fade this market, even with the subjectivity of the wave interpretations from the COVID lows. The 5-wave trends continue to be on the upside of the market. The counter trend corrective pullbacks continue to be to the downside. So until we see that dynamic reverse, there's no sense in being bearish or looking for a prolonged trend to the downside. Now, one of the key guides that we're watching here in this market is the work in treasuries. We've been tracking 20-year bonds as well as 10-year yields with our clients, and this is a very telling chart. So keep your eyes on this. We're looking for continuation in TLT ultimately to make a new high. If we get a 5-wave rally in TLT, that would start to open up the even more bullish interpretations of the indexes. So that's it for me. I do apologize again for not being with you guys last week. If you are interested, you can also sign up or subscribe to our Trading Analysis YouTube. We post content there as well. Just checking through the questions. I think we covered it. Let's jump back over to the team. All right, so what do you guys think?
Very good, Bennett. Yeah, I thought it was kind of interesting. One of our members in our members Discord posted a chart showing the fund inflows for small caps versus the Russell. With a significant drop off this year in inflows into the small caps, so it kind of explains why we've been sitting there just horizontal. Really,
Yep.
there's not any new money flowing in to continue to drive the Russell higher. So it'll be interesting to watch, see we start to see that trend reverse, and then I think we've got an opportunity to take off there. But just not seeing it yet. You know, when the markets go sideways, just stay away. So.
Yep, absolutely. Very well said. Yeah, that sideways price action in the Russell 2000 was certainly not bearish. Definitely not directional to the downside. So very good. We'll continue to track that. Let's get you set up. Terry's going to take you in through sector focus utilizing the Optima platform. All right, you ready to hit it?
Yes, sir.
All right, take it away.
Hello, traders. I'm Terry Long at tradinganalysis.com with your weekly sector focus. Welcome to September. So, where did the summer go? Let me show you here. Guys, if you sold in May and went away, you would have missed out on over a 7% gain in the S&P. And here in the NDX, we've seen nearly a 14% rise just over the summer period. All right, let's dig into this data here, which is for the week ending August 27th. We got Monday and Tuesday's data popping in right there. The S&P did continue to rise higher following the prior week's dip below its 20-day simple moving average, pushing once again to record highs, closing the week up 1.52% at 4509.37, and it looks to be pushing further this week up to 4522.68. The NDX followed suit also after dipping in the prior week almost down to the 50-day moving average, but it rose once again to another new record close, up 2.25% on the week. Compare that to the 1.5% on the S&P, and up to 15,432. And again, look at Monday's push here. We're already a further move higher, up to 15,582 right now before the market opens today. Now, the energy sector last week rebounded nearly 7.5%, recovering almost all of its prior week's decline. Financials, materials, communications, consumer discretionary, and industrials outperformed the benchmark S&P, while real estate, healthcare, staples, and utilities did underperform. Now, let's take a look at what's happened so far this week. Monday saw, as I mentioned, the markets ripped to new highs once again. I'll mention that Apple soared over 3% in a single day. I thought that was quite telling for technology. The S&P ended up 0.43% on Monday, pulled back about 0.13, so we're up 0.30 so far with Monday and Tuesday's action. And the tech-heavy NDX rose nearly 3 times as the rate of the S&P, up 1.12% on Monday, and declined about the same fraction, 0.14 on Tuesday. So we're sitting at about a 0.97, so still almost up 1% just in those past 2 trading days. Now this week we have real estate, and this is real estate here. We have communications, consumer discretionary, staples, and technology, and a little bit of healthcare. All of these are currently outperforming the S&P. Looks like energy is continuing to underperform once again, so is financial sector. Switch over here. Our weekly sector rotation this week shows us that we have 4 of the 11 sectors currently outperforming the benchmark S&P. Now, real estate remains our #1 sector with respect to relative strength. Now, technology and healthcare continue to advance further eastward into our leading quadrant. The communication and the real estate sector are both down into the weakening quadrant. with the southwesterly heading indicating a loss of momentum and relative strength. However, I do see some changes happening here right now in the communications sector. The weekly trend, first off, the weekly trend was weakening. It turned back into leading. And now what I'm seeing with Monday and Tuesday's added price action here, we're actually seeing the beginnings of the reversal hook. Now, I did also see the velocity declining. So this downward momentum that we had been seeing is now looks to be in a reversal mode. Now, although most of the value sectors are down here in the lagging quadrant, financials and materials are definitely showing the beginnings of a rotation back. And last week, we actually had a blue improving vector in financials. However, that has now faded back into a lagging performance and a southwesterly heading. I do have some rising momentum, but I am continuing to see degradation in relative strength here. Nevertheless, keep an eye on these guys because I think there might be some opportunity for them to return. The energy sector may have rebounded from its prior week's precipitous decline, but the sector itself is pushed deep down here into the lagging quadrant once again. From here, it may take much more significant time to reestablish itself as a leading sector. And it does appear to be on the decline again this week. The utilities and the consumer discretionary sectors are up here in the improving quadrant. Utilities has got a northeasterly heading, and well, we did sort of have that heading in the consumer discretionary, but I am kind of seeing a little bit of a hesitation in the heading right now. So it is pointing down towards the east. So that means gaining relative strength, but sliding just a tiny bit here on momentum. The vectors are very small, representing very minor changes in momentum. So I don't read much into this at all. And here's Staples. Staples also may be trying to form a reverse hook this week here, but it has pushed itself back down into the lagging quadrant. So I want to share something with you. I posted, let's see, let me get over here to it. I'm not going to go through all of these individual ones here. I posted this in our members only Discord yesterday. What do the top 20 performing stocks of 2021 have in common? Now, ranked according to year-to-date performance and selected from the list of the S&P 500, here they are. Let me just slide this down a bit so you can see the whole list there. So there's the top 20 year-to-date gains. We got Moderna up 200%, Nucor up 128%, Bath and Body Works. Bennett, what the F is up? Are people really stinky that they, that's what my wife said yesterday. What is going on? Why would Bath and Body Works, people are taking care of themselves at the
I
spa,
love
I
it.
guess. Fortinet. You and I were looking at Fortinet. Look at the price chart on this guy, right? So just straight vertical since November last year. It's really hard to put a wave count on that. I imagine my expert analyst Bennett, though, has probably done that. But yeah, that's, so all of these stocks, they have really outperformed the market. So what I want to share is let's take a look at something. This is a relative rotation chart of these stocks today. I'll sort this by relative strength. So I like that rather than have it in where's Moderna at? Oh, there's Moderna, up 200%. So where are all these stocks sitting right now? They're all over here in this Eastern Hemisphere, except for Marathon. Looks like Marathon Oil is finally starting to push down. So let me animate this. I'm going to take you all the way back to the beginning of 2021 because I want you to see what it looks like. These are the leaders before we knew they were going to be these stellar outperformers this year. This is where they were sitting, okay? So this is why I'm so adamant about looking for stuff that's up here in this improving quadrant with strong vectors pushing itself over here into the leading quadrant. Now, just because they're down in the weakening quadrant doesn't mean that we're losing money on them. These stocks are still continuing to make money. So let me animate this, because for the most part, almost all of these stocks, maybe NVIDIA and EXR had a little bit of trail to the left there, but for the most part, all year, these stocks have remained to the right of the polar axis. And now, just now, we're starting to see a few stocks looking like they're going to peel off. DXC Technology, Devon Energy, Marathon, these guys are starting to peel south. I'm actually seeing Wells Fargo fade just a little bit. But if we take out these ones that are pushing down, where's DXC? Let's we get a little bit better picture, right? And there's some more that are moving down, but the relative strength is really strong. I think this group that you've got right here, you really need to keep this list handy, because if we see any significant pullbacks in the market, would likely be a buying opportunity to get in on the next run of these stocks. A 10% market correction might have some nice continuations here. But these stocks are still, regardless of the fact that they have made stellar returns, they are still in a condition that they can continue to achieve more gains. So there's my 2 cents today, Bennett, and I know you've taken this list and probably working some of this up for our clientele. But it's hard to buy into a stock when it's sitting up here, right? Okay, nobody wants to do it. But let me just say, would you have wanted to buy Fortinet when it was sitting here at 200 after seeing all of that move, right? Okay, so it went from 200 to 315. You just missed out on a 50% gain if you said you didn't want to buy it simply because it was making new all-time highs, right? So that's why it's important to use additional technical analysis tools like we've got here with Optima and Motive Wave to get us in the best trades and the continuation. We want to be trading the strongest stocks that are going to continue to outperform, and that's what I love about this relative rotation graph. All right, Bennett, I'll send it back to you now.
Much appreciated. Thank you, Terry. Yeah, very interesting list there of the top 20 performing stocks year to date. Fortinet, man, I wish all stocks looked like that, just straight parabolic vertical breakouts. But hey, if all charts looked like that, we wouldn't have a market, right? So yeah, you know, that Bed Bath and Body Works is kind of interesting. I remember, I don't know, like 5 years ago, I was working an earnings model for, what was it, Bed Bath and Beyond. And my mom was over and having dinner, and she goes, "Oh, what are you working on?" I said, "Oh, I'm just working on an earnings report or earnings model for Bed Bath and Beyond." And she goes, "Oh, they're gonna miss earnings." I'm like, "Okay, well, what makes you say that?" She goes, "Oh, well, they've been running sales left and right. They've been pushing all kinds of promotions, trying to get product and inventory out the door." Okay, so the report comes, and it was a huge miss. It was pretty funny. But yeah, Moderna, that one has been quite the story, obviously, in light of the coronavirus vaccine or mRNA therapy, if you would. Let's quickly take a look at Fortinet, and then we'll jump in here with Alex. Let's see here. All right, we could bring us all in on this one. Taking a look at Fortinet, we're on a 195-minute chart here. Bottom left-hand corner of your screen is the March COVID low. Fortinet was trading a 70 handle back in the March low. We then rally up in 5 waves, correct in a sideways retracement in wave B, which ultimately gave us about a 50% retracement. What's really interesting is, you know, we were initially looking for this to maybe push to like 250, and here we are just smashing through some fairly key upside fib projections. So this higher degree green minor 3V1, we surpassed equality at 231. And the 1618 is up at 372. So could continue to get interesting there in Fortinet. And then Moderna. Moderna's seen quite the run. I think we're in a bit of a counter-trend corrective pullback here. This actually looks like we could just be hanging out in a triangle there for B, especially given the lack of significant retracement there. So, but to your
sideways
point,
price action is represented by the vertical movement downwards that I'm seeing in the relative rotation chart. So holding its relative strength nicely, just in a momentum decay right now. So definitely no reason to sell it. There's more upside coming. That's what the charts are telling us.
We'll keep our eyes on that one, and let's get Alex set up. He's ready to go as the presenter. I'm the one running behind today. So Alex, sir, are you ready to jump into it?
Yeah, sure.
All right, let's hit it. Take it away.
Hey guys, so let's dive in a little bit into a macro development. As you know, Jerome Powell was pretty much very vocal regarding the future plans of Fed. So interest rates on the upside is going to wait a little bit more. Of course, their emphasis was on the jobs outlook, and we have NFP. Last time also we noticed that ADP report came weaker than expected, and then we had Friday NFP numbers pretty much in the very high numbers. So let's see this Friday how this report will go. If we have a higher number or even close to estimate, I think that market will be a little bit tickled regarding the possibility of Fed at least taper. And Jerome Powell said one very important sentence, that the tapering will not go in hand to hand with the interest rate movements. So actually, he basically said that they might go down on liquidity, but even if they do that, the interest rates might stay on these current levels for the foreseeable futures. And as you saw, market reacted on the upside. So we will see what will happen on Friday on the NFP. Fed next meeting is on 21st of September. So we should get some more clues regarding that. Also, market reacted on the yields front. So as you know, we monitor these 10-year yields and markets because they function in the synchronicity, especially in regards of sector rotation of growth to value and vice versa. So currently, as you remember, we counted this as a potential ABC or a five-wave move on the upside. We are seeing now a pretty much undecisive move on the upside. This still can turn on Friday on the upside. So I still want to keep both of the options, but we don't see much of the follow-up. In the case we move down and actually count this as a five-wave move, then we will stay in some period for a longer time, even up to May 2022 in this ABC pullback, which can test this 0.5 levels on the downside. So all depends what is going to happen here. If we see a five-wave move, then ABC or a third wave might be finished. Anyhow, we will see some type of a pullback, but it will be at a much higher level than the levels you are seeing there. So we are carefully monitoring and observing what is going on there. If we see a five-wave move, definitely we will be on track to look for some type of a pullback or even go and continuation even lower. So I would like to be a little bit more conservative. If I want to price in a potential lower wave count on the 10-year yields, I want to have something like WXY or a bit more of a complex correction. Same things is happening on the German Bund. We are seeing, this is the chart of the price, not the yields, but they work invertly. So I just take this chart because of the nice Elliott wave count, but it's basically the same. If you see the price is moving down, yields are moving a little bit up, but this is just insignificant in European Union, which is a little bit slow in recovery, but we are seeing some progress in the inflation level in the European Union, so that might pose a certain risk. We will see how the ECB will address that on the next meeting, but overall we are still seeing some type of a consolidation here, and I think as long as we trade sideways for a couple of months ahead, this might turn out to be a triangle, and then we will continue maybe 2022, the end, into a new deflationary cycle. What is interesting here, if you see the new figures regarding the ECB, the balance sheet of the ECB, I think it's the biggest now compared to the GDP of all of the major countries, which are actually, there is a few these things posted on Twitter, which I found. You can find it anywhere, but this was a handy for me to use. So this guy is posting a nice things regarding these macro charts, and actually you can see that ECB is much around 80% of the Eurozone GDP, while the Fed is around 37, close to 40, so almost double. And also, if you see this chart, this is also central bank balance sheets, a percentage of the general government debt. ECB started for the last couple of months to also even surpass Japan. So as you can see, the loosening monetary policy is still very present on the ECB, and this is some kind of a figures. 80% of the GDP is pretty big number. So I would like to address and show you a dollar index. Usually we looked at to see what is going on with the basket of currencies against the dollar. Not much of a change from the last week. Dollar reacted a little bit lower on the Jerome Powell, Jackson Hole speech. We are still looking this as a small kind of a truncation here for this 5-wave move, and we are looking this as a part of the first 5 waves of the ongoing ABC pullback. This also might change into more complex, but let's go one wave at a time. And we are heading slowly towards this B wave and the support line around 91.56. So we should be there potentially around, let's say, close to 15th of September and maybe a little bit later. So we are carefully watching this potential corrective move for the further continuation. On the upside, we stopped this upside movement exactly on this very strong resistance levels around 93, which we looked in advance for. Usually you have the previous wave 4 as some type of resistance levels, and also the proximity of the lesser degree wave 4 also acted as a nice resistance zone for the further upside move on the dollar. So we are looking here for a consolidation and the further move on the upside. On the gold front, as the assets class is concerned regarding a still typical safe haven, we see from the low some type of a 5-wave move advance on the upside, but still overall wave count still looks for a corrective move ongoing. We don't see anything which will actually tell us either this being an X wave in some type of a triangle and lower, or a triangle. We still don't see anything on the upside which will classify as a beginning of this 5-wave move. So we are still thinking that gold will spend some time, presumably to the end of 2021, beginning 2022, in this corrective pullback, maybe in a triangle, maybe WXY. We still kind of looking for clues, which pattern. And when you have the 4th waves, it is a kind of a common thing for some time, especially if they start to be a little bit of a sideways move, as you see here, to actually address that when we have a final recognition of the potential pattern. In this moment, we can just throw a kind of a hypothesis, but one thing we noticed here, that the move from these highs was not impulsive, and the continuation is still sideways. So we are going to look for the development and the continuation higher on the gold when this sideways consolidation is finished. So there is only 3 waves down in whichever wave count you want to put them. So that is a signal for us that gold is going to potentially continue higher. So the same thing with silver. So we are looking a couple of wave counts also on silver. One which I usually exercise, I mean, it can be a triangle, but still we are capped in a 1 year consolidation. So this can be a 3-3-5, like some type of A up in B down in C, like an equal flat, which is a very rare pattern. Usually you have a running or expanding one and then a continuation on the upside. So as you can see, silver is still very capped between this support and resistance levels, and actually fluctuates around this area, which I think as well as in gold, this might be complete in the end of 2021, and we might see a potential initial 5-wave move and signs that silver might start to break down on the upside. That will be connected with the dollar finishing its ABC cycle potentially, or some global events. We don't know what is coming. We still have a couple of months to the end of 2021. I'm going to switch to cryptos now and show you what is going on there. So Bitcoin is still consolidating here. We still are tracking a couple of solutions. So this fourth wave are now exhibiting a little bit more kind of a bullish tilt. I'm looking 2 wave counts, one which is relatively bullish, which portrays a further move on the upside in the Bitcoin, and kind of a test and crossing of this 786, which it shows here, which is around 54 to 66. This is the usually last ratio when we actually start to look for the further advance to 127 and even further. 200 moving average provides a nice support, as you can see here. For the Bitcoin, I would not like to see a break of this 200 moving average on the downside. Next support is around 43 and 37 levels, and that will change a little bit picture. But for now, as long as we consolidate here, I'm going to start to price in a little bit more bullishness if this traces out as a triangle and the continuation on the upside. So as regards of the relation of the different altcoins and the Bitcoin, altcoins are definitely outperforming Bitcoin. We are seeing that in a numerous charts, and I can show you that in our platform where we track lots of. I will show you just the Binance coin, and for more, you can revisit this channel for the Crypto Lab with Alex. We are looking this coin for a kind of a very nice bullish development. This is a weekly chart, so if you can see, you will see 1-2-1-2 pretty nicely developed, and we are still in this orange wave 3 with a kind of a nice 1618 at a pretty higher levels. I have also shown this crypto market total cap chart, which I think it's bullish, and we can see that on numerous alts that it is preparing from this low potentially after a correction to see a big move on the upside. So join us tomorrow for the additional information, or visit Trading Analysis for a trial with our crypto membership or with our stocks trading. So back to you, Bennett.
Much appreciated, Alex. Thank you so much, sir. All right. Markets are open. And hey, if you guys are interested in more cryptocurrency related coverage, you can check out Alex's Crypto Lab show tomorrow morning, 9 a.m. Eastern, on our Trading Analysis YouTube channel, youtube.com/trading analysis. Apple moving up this morning, a nice breakout there in the works. Let's see here. Actually just closed out half a position with our members on a breakout there. So hey, if you did enjoy the content, please give it a thumbs up and subscribe with notifications to stay up to date with the Trading Analysis team. I need more caffeine this morning. Need more caffeine. Any final words of wisdom before we send them on their way?
Gotta get you a big mug like this.
Yeah, I know, right? Yep. Yep. I've actually been just trying to work out in the mornings to get my energy and get the COVID weight off. So we'll see. Hey, I appreciate it, guys. Thank you so much for tuning in and taking time out of your Wednesday morning to join us for the YouTube show. We'll be back same time, same place next week. Yeah, you can check us out anytime, tradinganalysis.com. Shameless plug. We do put out evening strategy video updates Sunday night through Thursday night, anywhere from 30 to 60 minutes, covering current day market performance as well as our outlook. It's a good time. So that's it. We'll leave it there, members. We'll see you in about 20 minutes for the member webinar. Alex, Terry, thank you, gentlemen.
All right. Next week, guys.
See you guys.
All right. Sounds good.
Labor Day. Got Labor Day holiday on Monday, so everybody enjoy their 3-day weekend.
That's right. Markets are closed.
Yeah.
Markets are closed Monday. All right. We'll see you guys next week. Take care.